Hello everybody, very good afternoon to you all and welcome to Non-Farm Payrolls live here at Taurex. My name is Connor Wood, Senior Market Analyst here at Taurex, and it's very good to be bringing you this NFP live stream. Really expecting some good volatility to end the week. This has been the first real week of normality that we've had so far this year. So although this is technically week 2 in January 2025, I've pretty much classed it as week 1. I still haven't done the journal yet, but I will update the journal with the oil trade that I put in the Discord channel. So not that, the one that I updated in the Discord channel, but the analysis was from the live stream on Tuesday or Wednesday or something like that. So we had really good trade there. So looking forward to sharing that with you, and of course having a quick overview of what to expect from non-farm payrolls today, and also the sort of reaction from that event live. We'll cover that in today's session as well. I know obviously it is Friday. People may be switching off after a long first week back at work, which is fine. I know some people do watch this on catch up, so it's very good to see you as well. This is a recorded session, and you'll be able to watch this back live on YouTube under the live section. Okay, right. So, looking at for today, non-farm payrolls is the only real thing that we need to focus on. We did have FOMC meeting minutes yesterday, and just to quickly keep you in the loop of all of that. Basically, it just confirmed that we're only really expecting one more interest rate cut in the first half of this year, and it's about a 50-50 chance, that's what the markets are pricing in, that we'll see another interest rate cut in the second half of the year. So we've completely flip-flopped really from 6 months ago to now, and now we have our first, as we come into Friday, we have our first really important piece of data which is going to influence, confirm, or bring the markets back into slightly more dovish tone from this non-farm payrolls today. And what I mean by that, and if you're unaware of what NFP is, on our economic calendar on Taurex Plus, which you can get a 30-day free trial, on the economic calendar there we have got explanations of what the events are. So if you are new to NFP, it's basically an employment statistics report released by the US Bureau of Labor Statistics, the BLS, and it's widely regarded as one of, if not the most volatile single event that we have in our calendars. And it gives us an idea of the number of new jobs that have been created in the previous month in all of the non-agricultural business or sector, should we say. The reason it's important is because of the impact it can have on the Forex market in particular, but also on stocks and also on things like gold as well. So when we look at the predictions for today, we have a forecast of 160,000 jobs being added. Now, the previous figure was 227,000, and I think, if I remember correctly, we're now at a stage where I think 3 out of the last 4 months we've seen an increase, or a non-farm payrolls report which is higher than what the forecast is. Okay, so when I look at the price action at the moment, when I go on the US dollar, and I see basically the fantastic run it's been on, as you can see, it's been really nice to trade. But I mentioned the other day that we are on these lower time, on this 4-hour time frame. You can just see how we're failing to create a higher high. So this is our market structure high. It'd help if I could draw it properly, wouldn't it? Market structure high there. Okay. And there it is, this high here, and you can see we're getting, well, there's one of two things we're doing here. We're seeing something like this, where we get a pause. Okay. To then go higher. Or, alternatively, what we're looking at is a situation where the dollar's maybe going to have some short-term selling. Things don't move in straight lines. I say that every single day, but things never move in straight lines. And if we do get a softening in the labour market today, which is basically, I'd say, a figure around 160, 170,000 or lower, right? If we do get that figure coming out today, I do expect that potentially what we might see is a little bit of selling pressure on the US dollar. So that would correspond to, obviously, because you're not necessarily trading the dollar index as such, but you would correspond that with maybe some GU upside, some euro dollar upside. I'd probably say if you look at the market structure between these two pairs, you can see the stronger of the two. So you can see that the pound has created a new low, whereas the euro has actually created a higher low. So if we're going to buy any of these currencies, if we're going to buy up any of these markets today, I think, play the weaker dollar scenario, then I would prefer to play it on the euro dollar because we have failed to create a new low. So with that in mind, any potential trading opportunities that we get from there, I'm just trying to see if I can see any sort of clear liquidity areas. Yeah, that's as clear as day. Equal lows, sell side liquidity. What I'm looking for is a move down to grab that liquidity, and then maybe we can target, I don't know, 1.04. I mean, the longer term target would probably be these equal highs here, this buy side liquidity. That would probably be my target there. So I'm looking for that basically on euro dollar, and then obviously that would be a move down here first. And you can get, remember, with NFP, just because the figure might come in stronger or weaker, sometimes you get a bit of a volatile random reaction, and the true move doesn't happen for another hour or maybe sometimes even the following week. So although people would say, yeah, but if NFP comes in weak, then you're not going to get a dip in euro dollar. You still might. It depends what the figure is. If it's like, 80k, then yeah, I get that. But if it's like somewhere around the forecast, we might see some initial selling in euro dollar and then a move higher. Now, I'm a bit more bearish on the pound than the euro. That's pretty much because there's a big fiscal problem in the UK at the moment, and there's just everyone's just a bit downbeat about it. So if we do get that stronger dollar play today, I'm trying to think maybe dollar yen could explode higher. CAD, AD, USD, what's that saying? No, I'll tell you what, if we do get if we get another weaker dollar play, I forgot to say this, the market that we should be trading 100% is gold. So if we do get a figure which is roughly around what the forecast is now, I think, and this is analysis that I posted in our Discord channel, I believe that we may see finally a breakout above this pattern here. Or the stronger dollar play might see this act as another reaction from the trend line, and we could play gold back down towards sort of 2,600, and we may see a continuation of the squeezing price action. But that would be if we got a stronger NFP, and a stronger NFP would be something like at least 220,000, even potentially higher. That would feed into that less dovish narrative. That would feed into that stronger dollar narrative. It'd probably feed into some stock market weakness as well. Now, of course, when you get the non-farm, I've got 4 minutes to go. Wow, it's gone quick. Non-farm payrolls, when you've got the report coming out, you don't just have access to the non-farm payroll report. You've also got average hourly earnings and the unemployment rate as well, which I want to draw your attention to, because that can have an impact, especially if the non-farm payrolls figure isn't very exciting at all. People tend to then look at the average hourly earnings, which are expected to fall by 0.1%. And also, but remain flat on the year, and the unemployment rate is expected to remain at 4.2% as well. So again, obviously, if we get an increase in unemployment, then that's going to be our weaker dollar play. If unemployment decreases, so we get say 4.1% or 4%, then that's our bullish dollar play. Okay, so if we do get stronger dollar play, we can play the rotation gold back down towards 2,600. A weaker dollar play, then I expect gold to break out And then that may be the fuel needed for a broader breakout up to 2,800, because I'm quite bullish on gold. And the stronger dollar play, just trying to think, AD USD is probably the best one. Yeah. Look at that. Who remembers this as well? Who remembers this fair value gap trade? Because this is an absolute monster. I know you probably wouldn't have held that long, but just from that fair value gap test, 20-1 risk versus reward, if you did manage to hold on to that. Now, I did that analysis back in the beginning of December, so you're probably not in the trade. I'm not in the trade anymore, because my target was 0.634, but wow, that's a good educational, that's a good case study trade to have a look at. So yeah, sorry, it's stronger dollar play. Then obviously we're going to be, looking to keep targeting new lows. Down at 6.17 could be the target for that as we go throughout. And just before I finish, or just before we pause to see the actual figure that comes out, absolutely textbook analysis on oil. This trade's still running for me, and it's actually running at 10-1 risk versus reward, but I have closed off obviously some partials along the way, so looking at like a 4 or 5% gain on that one trade, which I'm very happy with. So just to give you some breakdown of what happened here, we had sell side liquidity here, these equal lows, but we also had a demand zone underneath it. So even though we saw that move higher, we always said that we were waiting for that pullback, and I told Bobby and the guys in the Discord channel about this, particularly Bobby because he likes trading oil. We've got a move down towards there and then a move higher. Right, okay, I should stop talking now because we have got NFP just around the corner. Good luck to all those who are trading, and if you do have the figure to hand, let me know. You got 17 seconds until the release. I'm on the 1 minute gold chart. What do you reckon? Here we go. Oh, there goes gold. I imagine we've just got a stronger NFP print. It's not come through for me just yet. Gold is sinking at the moment. 256. 256,000 on non-farm employment change. That is a bullish dollar react. Look at that. Yeah, that's a bullish dollar. Jeez. 4.1% unemployment rate as well, which is down from the 4.2% before. Yeah, this is very strong for the US dollar, guys. This is what's happened to the stock market. That won't like that. I didn't think it would like that either. So that's the reason it's not liking that is because it's all feeding into this one, lack or less interest rate cuts than we thought. Two, we're now even going further than that, than saying, are we going to get now an increase in inflation? Why is that? Because, well, if the jobs market's hot, people are still being employed, the economy's really strong. When the economy's strong, obviously prices go higher and inflation increases typically. So that's what the concern here is. So that is a really hawkish reaction. I imagine the oil prices, I didn't really move to be fair, but already up 3.36% on the day. There goes dollar yen. Wow. Probably could delete. I need to probably do my drawings again on dollar yen. Let's have a look at AED USD. I imagine that we're selling off. Yeah. No real surprise there. Wow. Very surprised at that. I did not actually expect it to be that. I was actually sort of going down the route of thinking that we may see a bit of a dollar pullback, but this is just this is just proof to me that yeah, look, it looks like we're going to create a new high. I now need to rethink about this potential dollar sell-off, so shall we say. I still believe that we may get a pause period in the dollar, because we are now pricing in some real hawkish price action. Or I don't like to use the word hawkish because we're not hiking rates, but it feels hawkish from what we're used to. But I think now that we can, safely say that fundamentally, we are bullish on the dollar index after that. And of course, there will be inflation data coming out, and if that, we could be talking only one more interest rate cut this year. I find that crazy to think, but obviously we'll see how that goes. And I don't think that the stock market's going to like that very much at all. And as you can see already, S&P 500, if you're looking for a little bit of a buy the dip opportunity, we have nearly come down and tested this trend line from this consolidation pattern that we've got. So we could, because it's still showing a strong economy, right? It's just that the stock market doesn't like inflation. So maybe we could play a move back up into the middle of this range, maybe some move up to 5,900. I'm not going to be doing that personally. I always let the market settle when it comes to NFP, but interesting to see. Imagine if we get a breakdown below this, then we may officially be saying that we're starting the year bearish on Wall Street, on the S&P 500, etc. So yeah, there's that gone as well. If we were going to play, obviously we said we'd only play euro dollar upside if we got a liquidity grab down here. Well, as you can see, the weakness is there for everyone to see. We're going to close below that, so we can actually delete that and start fresh. Looks like we're going to create a new low. Pound dollar again, man. Look at that. It's down to yearly lows as well. Lowest level on the pound versus the US dollar for over a year. I wouldn't be too hasty selling gold. I still think that we've got a good year in us in gold, to be honest. And you can see that despite the massive increase in the dollar index, you can see that gold prices have pretty much still been grinding higher, right? So I actually think that potentially I'm on the lookout for any dips here in gold to potentially look to buy from. But I am more than anything else, that's a really positive report for our oil trade. And I believe that we maybe having a move up towards 78.4. Wow. I didn't expect that. I really didn't expect it to be that strong. So that's definitely a bullish dollar story we've got coming on. So it doesn't mean we just go jumping into dollar buys, by the way. Just be careful. Let's let the market settle first. There will be pause periods. There will be times where the dollar sells off. But all this is doing is confirming our sort of narrative that we're expecting a considerably less dovish Federal Reserve than we first thought. The data doesn't lie. It's strong. It's almost inflationary. And we know what happened to the dollar index. We know what happened to the stock market in 2022 when the Federal Reserve were hiking rates because of inflation. I just wonder if we're starting to see that sort of spike in inflation coming again. Obviously the CPI report will be huge, and I believe that comes out in a couple of weeks' time. Wow, okay, nice. Does anyone have any questions they would like to put forward to me on the chat or in the Discord channel or anything like that about today, or anything that you're confused about, anything you want me to analyze for you? Let me know in the chat section now, and I will go through them with you, and I'll just leave it sort of 20-30 seconds or so just to get people to answer the questions. I imagine there's a little bit of a delay. Okay, no problem. Right, I hope everyone has a fantastic weekend, and I will see you next week. Or I will be active for the rest of the day in the Discord channel if you do need me. And if you are looking to get involved in that, then you can look at the link on any of our social medias or let me know, and I can drop the link in there as well. I have done that before, so you should be able to see that in the description. Until then, have a fantastic weekend, trade well, and we have got a much, much stronger NFP report than we thought. Let's see how it all plays out next week. Take care. Thank you. Bye.